Good morning, traders. John Caruso coming to you here for November 5th with your currency commentary for today. First, we're going to take a look at the ISM non-manufacturing data that came out here in the United States. We actually did see a better reading than expected. The number came in at 55.4. The market was expecting 54.5, so we beat the street there. The dollar loves it. Dollar's up 20 points right now, sitting about 80.84. We do have initial resistance coming in at 80.92. We saw the spike high at 80.89. So 80.92, good resistance area right there. If we can punch through the high that we saw back on Monday, which was just over 81, that should carry us potentially to 81.30 in the short run. The market's been on a tear as of lately. Last week's FOMC meeting, a little bit more hawkish on taper talk. They're putting the taper back on the table possibly for December. I think that's highly unlikely. I think we're looking at a January, potentially February taper from the Fed. So looking at the euro currency, 134.58, we're seeing that sell off down 59 ticks. We saw a very low inflation reading out of the ECB early on this week. We are expecting a possible rate cut coming from the ECB on Thursday's meeting. So perhaps the euro is pricing that in. We got some near-term support coming in at 134.50. If we can punch through that, that's going to open up selling possibly to the 132 handle, the high 132 handle. I'm also looking at the British pound right now. We are seeing the UK forge a pretty impressive economic recovery here lately. But as far as looking at the technicals, it looks like we may have put in a little bit of a double top. A close or a slide back through 159 confirms the double top. I'm looking at areas right now. We're seeing the British pound trade around 160.30. If we sneak back into the 160.50 to 161 range, I am looking at an opportunity to go short on that market. If you want more details on that, please feel free to give me a call anytime, 800-669-5354. And as always, trading futures and options carries risk. It may not be suitable for all investors.